This narrative recounts a genuine occurrence that took place in Watford, Hertfordshire, during the pandemic time. Until now, middle-class and working peoples are suffering due to the interest rate hike. In 2020, each day, countless individuals lose their lives, not just in England but across the globe, as the world grapples with unprecedented turmoil. Humanity has not encountered a pandemic of this magnitude in the 20th century. Unfortunately, there are unscrupulous individuals who seek to exploit this crisis for their own gain. Consequently, we find ourselves facing exorbitant interest rates and a significant financial burden. It is essential to unveil this true story. Due to the closure of 95% of businesses during the pandemic, the UK government was concerned about the potential collapse of the economy. In response, they aimed to provide support to businesses and self-employed individuals to ensure their survival. On May 4, 2020, the UK government introduced the Bounce Back Loan Scheme. However, shortly after its implementation, criminal activities began to emerge. How many of us know that a PDF book has been circulated extensively by criminals and certain community members, detailing methods, how illegally obtain bounce-back loans? This publication meticulously highlights every loophole that can be exploited in the process. The family we are talking about, they resided in North Watford. The husband worked as an Uber Eats driver and maintained 2 business banking accounts. Meanwhile, the wife engaged in Amazon Flex, delivering small parcels, and held 1 business banking account. When delivery drivers establish bank accounts, the banks often lack clarity regarding their transactions, as funds may originate from Amazon at times, while at other times, they may involve cash deposits. United Kingdom government declared that any business is eligible to apply for the bounce-back loan. This decision is considered one of the most significant errors made by the UK government. If an individual possesses an active business account, they are indeed able to submit an application. On this occasion, the husband initially applied for a loan of £50,000, which was approved on the spot, and he subsequently received the funds. He then proceeded to apply again using a second bank account, and once more he was granted an additional £50,000. The wife subsequently applied for a loan of £50,000, which was also approved. This bounce-back loan was notably straightforward to secure, as it was funded by the government rather than the private sector. Upon receiving a total of £150,000, the family initiated their plans to leave the United Kingdom. They hold permanent residency in the UK and are foreign nationals. When you have permanent residence, you can engage in business. In Canada, an investment of £150,000 will effectively be doubled. With 300,000 Canadian dollars, one can easily purchase a home valued at $250,000, allowing for a straightforward transaction. The remaining $50,000 can be deposited into a savings account to earn favorable interest rates. Ultimately, there are no intentions to return to the United Kingdom, as they have applied for a migration visa and received assistance from relatives who are already residing in Canada. This family also deplete their credit cards, secure personal loans, and optimize their cash resources. Canada's immigration framework is meticulously regulated and features some of the most stringent documentation requirements globally. Nevertheless, they were able to meet these criteria by demonstrating a substantial balance in their bank accounts. This particular family managed to escape to Canada with a massive amount of money. This is just one true story, but imagine how many untold stories remain hidden. A total of $47 billion has been disbursed in bounce-back loans, of which a staggering $17.5 billion has been lost to fraudulent activities. The government has acknowledged its inability to recover these funds. Compounding the issue, the UK government hired 1,000 staff members specifically to pursue the recovery of this money from fraudsters, yet they have achieved no success. Consequently, taxpayer money has been utilized to pay the salaries of these 1,000 employees without any tangible results. Until now, we have been the ones bearing the burden of the bounce-back loan scheme. The government has yet to recover the losses, and the Rishi Sunak administration is no longer in power. Meanwhile, The Labour Party has signed a significant deal with electric car manufacturers, aiming to phase out petrol and diesel vehicles by 2035. However, this transition raises concerns about the future, with potential long wait times at fuel stations and charging points becoming a common issue. In our next video, we uncover the invisible revenue drain in chargebacks. Over 75% of customers in the UK and US have filed a chargeback in the past year, fueling a global chargeback volume projected to reach $165 billion by 2025. If you find this video insightful, please share it, click the bell icon, and subscribe to our new channel to support our work. If you have information or stories to share, reach out to us via email. We will investigate and bring those hidden crimes to light.